This requires execution, not promises. Fully open mainnet, no restrictions. 100 mem plus active users actually using Pi daily. A strong DApp ecosystem, payments, DeFi, marketplaces. Real-world usage, people paying for good services with Pi. What must happen? Serious developers building useful products, not hype apps. Clear regulations that allow Pi to operate as a legitimate asset. Strong liquidity, easy to buy, sell Pi on exchanges. Reality check. Most projects claim this, but very few achieve it. If Pi fails to attract high-level builders, this scenario collapses. 2. Most likely scenario. Pi becomes a semi-useful token. A small but limited ecosystem, used mainly dakhil its own community. Closed-loop usage. Listed on some exchanges, but with weak liquidity. A few winners, but most holders stuck with low utility. Core problems. Oversupply, too many users holding large amounts, weak demand relative to supply, gradual decline of hype. This is where many crypto projects end up. Chapter 3, worst case scenario. Pi stays in the illusion phase. Open mainnet keeps getting delayed. No meaningful utility emerges. Users lose interest over time. Pi remains a theoretical value, not a real asset. Hard truth, crypto doesn't forgive lack of utility. No use case equals no survival. And are 4 factors that will decide Pi's future by 2030. 1. Execution, not promises. By 2030, only delivered results will matter. 2. Developer adoption. No builders equals no ecosystem. Simple. 3. Liquidity and exchange presence. No liquidity equals no real value. 4. User trust. Once trust is lost, it's extremely hard to recover. Brutal conclusion. Pi is not easily dismissed as a scam, but it is also far from a proven success. It's a high-risk, high-uncertainty bet. If you treat it as an investment, don't rely on Pi alone. Think of it as optional upside, not a guaranteed future. The question you must answer: if Pi stopped today, what real-world value could you extract from it? If the answer is none, then you already have your 2030 answer. And this: price is not magic. It's a function of supply, demand, and liquidity. Number 1. The uncomfortable truth. Supply problem. Pi has tens of billions of coins, potentially 100 B max supply. Millions of users hold Pi, many waiting to sell. Translation: massive selling pressure is inevitable once liquidity is unlocked. If demand doesn't match this, price stays low. Number 2. Realistic price scenarios for 2030. Worst case, Null 01 turns 05 fifth. Weak ecosystem, low demand, users dumping Pi, few exchanges. This is where most failed or overhyped crypto projects land. Mid case, most likely, 0.11 Null, some utility exists, moderate adoption, limited but real exchange listings. This requires Pi to actually work, not just exist. Best case, $5.20 plus, strong global adoption, real businesses accepting Pi, high transaction volume, scarcity mechanisms burning, locking, etc. Brutal honesty. This scenario is extremely hot impossible but rare. Number 3. The biggest illusion you must avoid. Many people think, open quote, if Pi reaches $100, I'll be rich, close quote. Let's stress test that. If Pi equals $100 with tens of billions supply, that implies $1 trillion market cap that would put Pi near or above giants like Bitcoin or Ethereum. Ask yourself honestly, what has Pi built today to justify that level? Number 4. Smart strategy, if you hold Pi. Strategy 1, assume uncertainty. Don't build your future around Pi. Strategy 2, take advantage of upside if it happens. If Pi gets listed and pumps, take profits gradually. Don't diamond hand blindly. Strategy 3, look beyond Pi. Other crypto with real traction, skills, business, or income streams. Pi should be one bet, not your entire plan. Strategy 4, watch signals, not announcements. Ignore hype. Track this instead. Are real apps being used daily? Are developers building consistently? Is liquidity increasing? Are people using Pi outside its community? If the answer is no, adjust expectations fast. Final reality check. Pi is not about belief, it's about execution under pressure. Realistic range for Pi by 2030 is $0.DON and $1. This isn't guesswork, here's the logic behind it. 1. Massive supply problem. Pi could reach up to 100 billion coins. Millions of users already hold Pi and are waiting to sell. Translation: heavy selling pressure once trading is fully open. This limits how high the price can go. Number 2. Weak demand for now. Right now, no strong presence on major exchanges, limited real-world usage, very few businesses accepting Pi. If this doesn't change significantly, price growth will stay limited. Number 3. Brutal competition. Pi is not alone. It competes with giants like Bitcoin, Store of Value, Ethereum, smart contracts and ecosystem. For Pi to win, it needs a clear, powerful advantage, otherwise it gets left behind. Hard reality check. $10 to $100? Highly unrealistic, unless something extraordinary happens. Why? Would require mass global adoption, demand far exceeding supply, a $1 trillion market cap. There's no strong evidence of that trajectory today. Clean breakdown. Worst case for $1, most likely $1.1. Best case, rare, $3. $5, the core truth price doesn't create value, utility does. If Pi is widely used for real payments, has apps people use daily, has strong liquidity, then price can rise. If not, price stays low, no matter how many people hold it. Final reality, Pi is not a lottery ticket, it's an experiment. By 2030, it will either prove real-world value or become another overhyped project that faded out. One question you need to answer. If Pi hits 0.5 tomorrow, would you sell or wait for $10? Risk. If you wait for the perfect price, you'll likely miss it completely. Step 1. Define your levels before price moves. Here's a disciplined structure you can use. If Pi reaches 0.1, sell 10 to 20%. Reason. Test liquidity plus secure first profit. If Pi reaches 0.5, sell 20 to 30%. Reason, this is a realistic peak zone for many holders. If Pi reaches 1, sell 30 to 40%. Reason, strong psychological resistance level. Most people will start dumping here. If Pi reaches 3+, sell most of what's left, 40%, 80%. Reason, this is rare territory based on fundamentals. Don't get greedy here. Step 2. Never go all in or all out. Bad strategies. Holding everything forever, selling everything too early. Smart move. Step 3. Watch these signals, not hype. Ignore announcements. Track reality. Real indicators. Are people actually spending Pi? Are apps being used daily? Is Pi listed on real exchanges with volume? Is liquidity increasing? Danger signals. Only hype on social media. Delays with no clear progress. No real usage outside the community. If you see these, sell more aggressively. Step 4. Control your psychology. Most people lose money because of greed. It will go higher. Fear. What if I miss out? Truth. Markets punish emotions. Reward discipline. Step 5. Convert profits into real assets. When you sell Pi, don't just hold cash. Move into stronger assets like Bitcoin, Ethereum, or real-world investments business. Al-Hadaf, turn speculation into stability. Have final reality check. If Pi never reaches $1, will your strategy still protect you?